Where are you looking? I mean, what's your appetite right now?
Well, it's mainly in ARB-related investments. I have a pretty good position in Activision, which is the Microsoft acquisition, which may or may not, but it looks good in the next 2 to 3 weeks at $95, and the stock's just below 92. So I think that's a good value. And the best value that I think out there, Romaine, is in the MLPs, the pipelines that are partnerships. First of all, they're tax deferred, and second of all, they yield 8 to 8.5%, and participates, yes, when oil prices go up, and if oil prices went back down, they're correlated to some extent. But these are investments that are very attractive, especially one, Magellan, which is a symbol MMP. It's selling at a 6% discount to its acquirer, which is OKE, and that could take place in 1 to 2 months. And so these have been my major money makers in addition to the regionals.
Is that primarily, though, looking for cash flow, or is there a growth story there as well?
Well, I think so. I'm 79, and so portfolios reflect the fact that cash flow is important. It's not that I'm dissing NVIDIA, although I did a week or 2 weeks ago. But at 8 to 8.5% tax deferred, that's really an equivalent yield of about 11 or 12% when you put a pencil to it. And so that to me is an excellent return. The stock market itself, you haven't asked this question, but let me get into it. The equity risk premium, as pointed out by The Economist just last night, their weekly edition, the equity risk premium, which is the difference between the equity, it's the PE ratio upside down. So if the PE is 20, it's a 5% premium relative to the 10-year. Right now, it's less than 1%, which is almost historically low. It means investors are willing to take equity risk relative to a 10-year treasury, which, in my view, is overvalued itself. And so, the market, the stock market, I think is overvalued based upon those terms and other terms as well.